Hello, this is Andrew Undem with the Sure Group here at RE/MAX Sales. Welcome to the second floor of our office. I wanted to make a quick video to explain the CHAP tax credit. I've been talking to a lot of buyers, builders, even other real estate professionals, and I think there's a little gray area with this CHAP tax credit. So come on in. We'll also show you a bit of our office. This is the second floor of the Broom Factory, 3500 Boston Street. A lot of you guys probably haven't been up here yet. Big conference room. From about here down is Sure. I see Joe Sacchetti back there with Matt Pecker. Come on in our office. So again, I wanted to mention the CHAP tax credit. So here's a crash course in what this is. This might help you wrap your head around the whole deal with the CHAP. So the CHAP stands for the Commission for Historical and Architectural Preservation, CHAP. CHAP was started in 1964 to promote the culture and the economy of Baltimore City through renovating buildings, residential, commercial, industrial, the whole gamut. In 1997, they introduced the CHAP tax credit. And if you're looking at homes in the city, you've probably heard a lot about it. It's a big deal because it can save you as a consumer a lot of money. So here's how it works. There's 4 steps to getting a CHAP tax credit. Number 1, you have to be in the CHAP district. Okay, so we're gonna throw up, right Brandon, we're gonna throw up a map of that. 2 is you have to apply to get the CHAP tax credit before you start working on your house. Okay, this is a big question people ask. Well, can I get the CHAP now? If I go back and do X, Y, and Z, can I get this tax credit? The answer is no. You have to apply before you start the renovation. Step 3, you have to put in 25% of the current assessed value of the house back into the home. So if the house is worth $200,000, you have to put at least $50,000 into the renovation, 25% of the assessed value. And finally, all the work that you do in the house needs to meet the CHAP guidelines. So I know that's a lot, you might not care about that, but that's the process the builders and investors have to go through to get the CHAP tax credit. So there's a whole bunch more information on that. I'm kind of bottom lining it for you. We'll throw a brochure of the pre-CHAP approval process, what has to happen just to get the okay, the green light to start the renovation, and then the process for fulfilling the process and getting your final CHAP certification. So throw up the brochures for those as well. Here's what it means for you as a buyer. Whenever someone applies for this CHAP tax credit, part of the application process is the people from CHAP come to the house, and what they're gonna do is give you a pre-improvement value. Before you renovate the house, here's what we think it's worth. That's kind of what CHAP says. So for example, they'll come out common numbers here in Canton, Federal Hill, Locust Point, Brewers Hill. This house is worth currently $150,000. That's the pre-improvement value. That number is very important. Because at the end, when they come back to give you your final CHAP certification, CHAP comes back and says, here's what we think the post-improvement value is. And this has nothing to do with what you're gonna pay for it, and it also has nothing to do with what the builder acquired the property for. This is CHAP, CHAP rules everything. Here's what they think it's worth before you improve it, here's what they think it's worth after it's done. The delta between those two numbers, so I kind of wrote a little math formula out there. So A, pre-improvement, B, post-improvement, C, the city's tax rate. B minus A, so the delta between these two numbers, which is obviously $300,000. If, for example, it's worth $150 beforehand and $450 when they're done, $300,000 times the tax rate. So this is the Baltimore City tax rate. Gives you a figure. That figure is your CHAP tax credit. Okay, so the taxes aren't frozen. There's a lot of language getting thrown around out there that it kind of confuses people, but this is straight from Baltimore City. This is how it works. So if that makes sense, I'm gonna run through it one more time. Pre, post times the city tax rate. Bought the shell's worth $150. They sold it for $450. The difference is $300. $300,000 times the tax rate is $6,804. Every year you save $6,804 on that house if the pre was $150 and the post was $450. For a total of 10 years, that's $68,000 you save owning that CHAP tax credit home versus a non-CHAP home. And the reason this is important, and the reason I wanted to make this video, is we have, I want to say, 30 renovations coming up in Canton, Federal Hill, Locust Point, Brewers Hill, Fells Point. These areas that are very popular, they're not on the market. So if you're interested in buying a CHAP, or you have more questions about the CHAP, because there's a lot more to it, these are the bullet points, we'd love to reach out and talk to you about it. And for all those people with money on the sidelines or money in the stock market that's at all-time highs, why don't you get that money out of the stock market and put it into a livable, rentable, appreciable, depreciable asset that is real estate, and the CHAP tax credit's a good way to increase your cash flow. That's all I got for today. Thanks a lot, guys.